Okay, so lastly, we want to tie everything into a trading plan. So just a few points before I want to close. First is, after you've gone through this seminar, after you've gone through this workshop, obviously you're going to go home and you're going to ask yourself, how am I going to go through this? Obviously, it's much harder when you're by yourself in front of your computer. And what we've done is that we've created some steps already for you to be able to determine on what process you need to undergo for the decisions that you need to make. The first is you want to be able to identify the trend in place. Is it an uptrend? Is it a downtrend? Is it a sideways? Second is that, are there any durations in play? If there are any durations in play, is it a duration in time? Is it a duration price? If yes, what corresponding tools and techniques do I need? Is it FIBO? Is it area pattern techniques to be able to participate in this uptrend in place? And once you've identified whether it's an uptrend or whether there's a duration in place, or if it's magnitude duration, the next step is to look for a justified entry. I want to be able to highlight the word justified. Why? Because there's a huge difference. There's a line in the sand that separates justifying something and rationalizing something. When we say justifying entries, it means buying on the bounds of support or buying at an area pattern resistance. Some people will tend to bargain with price. They see, malayo na sa support, it's in the middle, pero may disclosure eh. And maganda yung earnings eh, so bilhin ko na ngayon. Di ba? People tend to bargain. Or, wala namang volume dun sa support eh, so I'll just bilhin ko na, okay lang naman ngayon. People tend to rationalize why it's okay to enter in other areas. When in fact, the justified or the more disciplined that you enter, the smaller the losses that you'll be taking. Next one is estimate your targets and your stops. Now, this is very important. When you guys decide to do this, when you guys decide to look at identifying trends, looking at your charts, you go through your charting software, your different charts, it's always best to go through this process outside market hours. Whether it's lunchtime, before the market opens, or at night. Why is that? Because for me, from my experience, it's always very difficult to come up with a list or with an objective trading plan when the market is already open, when the fireworks already happening left and right, right? Things are moving left, things are moving right. You tend to react on the market as opposed to proactively engaging in the opportunities that are there for you, at least for the day. If there are no opportunities, then there's nothing that you can do, right? Now, so it's always very important to do these things outside market hours, to be proactive and not reactive. And when you do your trade plan, the minimum that I always require from myself when I come up with my list of names is that I always come out with 3 numbers or 3 things: my entry, my target, and my stop. So those are the 3 minimums that I require for every issue that I watch list, for every issue that goes on to my focused list for the day. Guess what? If an issue, 90% of the issues that don't even go into my watch list or the focus list, I don't even participate in. So I don't even participate in if these things start to move, right? Now, so you want to be able to come up with your trading plan, your entry, your target, your stops. You want to be able to premeditate your stops. Why? Because the last thing you want to do is when your stops are hit, people again tend to bargain. What do I mean? When your stop is hit, then you're gonna some people or some traders, or I used to do it, sabihin ko, na-hit yung stop ko, hindi, may previous low pa dito, pwede ko hintayin dito. Hindi, may previous low, may moving average pa dito. Diba? You tend to negotiate with your stops when that's actually a worst case practice. Whatever stop that you set premeditated before the market opens, when you make your trading plan, then that's the stop that you should be honoring. Next is you want to practice good trade management habits, which I'll discuss later. And then after you've closed every trade, you want to be able to measure the results that you make from your trading. So just to go through them very quickly, again, a justified entry is just to recap, it is a breakout of area pattern resistance or a bounce of support. Now, obviously, your indicators are something that you can use to support your justified entry. So as you make your justified entry, one of the things you can do is you want to create a checklist. Are you moving averages with you? Is your MACD giving you a buy signal, or is in the process of giving you a buying signal? Remember, MACD often tends to lag. When you're buying a breakout of an area pattern resistance, is there a bearish divergence in place? Right? So these are the things that you want to answer and avoid as much red flags as possible. But for me, the most important is still sticking to the discipline of buying bounce of support, breakout of area pattern resistance. And always keep in mind the bigger picture that more than half of the time or half of the time you're going to be wrong and you're going to need to cut losses. Estimate your targets. So we can use, you can use your resistance line as your first basis for your targets, for maybe mentally preparing yourself to sell some of those positions. You can use the breakout target of your consolidations, what most people also term as Darvas boxes. So you can also use that size of the boxes, put it on top. You can use the minimum breakout of those boxes as your minimum breakout targets. Estimate your selling stops. Ito, very important. Obviously, your first stop is determined by your entry pivot, right? So if you decide to enter a bounce of support or a breakout of an area pattern resistance, then it's very obvious what your first support will be. The next support that I always use, let's say after I buy a position and say that position has gone up 5-10%, if I'm holding on to a big cap, typically after 5%, I like to raise my stop to break-even levels. Which means that if I'm already ahead 5%, especially on a big cap, hindi na ako magpapatalo dyan. Tabla o panalo na lang ang laro dyan. Diba? Obviously, for smaller caps, you might want to use a larger buffer. But eventually, after the break-even stop, you want to use trail stops. Trailing stops, meaning running stops that will protect whatever winning positions that you have if it goes below that. You can use your uptrend line for that, obviously. But for me, when it comes to trail stops, I like using my moving averages. So especially for my big positions, I like using my 65-day and my 32-day simple moving average. And then for my small cap runners, I would typically like to use my 32-day SMA and my 16-day SMA. Establish your stops before you even enter a position is of utmost importance. And step 2 is honoring those stops when those stops are hit. And when I say honoring, swiftly executing and not bargaining, not rationalizing why you should move your stop when it's happening. So this is a trail stop. So I recommended your uptrend line a while ago, but I would also recommend using your moving averages. Okay. Second to the last step is practicing good money management habits. First money management habit that you want to do is to be diversified but not too over-diversified. What do I mean by that? One of the most used financial advice is not putting all of your eggs in one basket. I mean, there's no shortage of that advice in today's financial environment. But if there's one shortage of what people don't talk about, it's over-diversifying. Yung tipong pagtingin mo yung portfolio, 20, 30 stocks yung hawak. One time, I looked at a friend na nagpatulong sa akin na pag-manage ng stocks. Sabi ko, ano sa yung hawak mo na stocks? Pulled out parang naka-roll yun na mga papel. Literally, 5 pages yung stocks niya sa traditional brokerage. Oh, obviously, that's an exaggeration. That's an extreme example. But the point is that if you're able to participate in an uptrending stock, you want that stock to be meaningful enough for you. Especially if you're starting out, I would recommend a maximum of 20% allocation per one stock. 20% max. Which means that you can have a minimum of 5 or a maximum of 8 issues in your portfolio. I'd say when you're starting out, anything more than 10 is already being over-diversified. Even if, let's say, you have a 10, 20, 50 million, 100 million portfolio, I would even think that more than 10 issues would already be pushing it.